You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it begins. Yes, our broadcast week has commenced here on the old Options Insider Radio Network. My name is Mark Longo. I'll be your host. I'll be your guide. I'll be your maitre d' through many of these forays into the world of options this week. Kicking it all off, of course, with the old OB, a.k.a. the Option Block, your bi-weekly source for all things options related. If you want to tune into something live during your trading day every Monday and Thursday for this show, noon Central, 1 p.m. Eastern. Come back a little bit later today with Crypto Rundown. Should have a good guest for that one. All sorts of fun stuff. We got Options Boot Camp later on this week. It's going to be hitting live, as well as a bunch of other fun stuff. OPR doesn't make it live, unfortunately, but it'll make it live to your ear holes on the podcast version. And then, of course, we got TWIFO, another Option Block on Thursday, Vol Views on Friday, and a bunch of other fun stuff scattered throughout there as well. Advisors Option, other fun stuff lurking. So check the website for the live broadcast schedule if you like it immediately in your ear holes. Otherwise, just subscribe after the fact on pretty much any platform out there, including YouTube, a growing cadre of you out there on the old YouTubes. Of course, wherever you listen, make sure you leave a review, a comment, so other folks can continue to discover this fun program. Keep those questions coming. We do love to hear from you guys. And joining me on the show today, let's see who we're hearing from today. First, heading on out to that provincial hamlet known as St. Charles. We are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir, I have it on good authority from my birdies that you may have indeed slipped outside the weather shield this weekend. What's going on up there, sir?
Slipped outside the weather shield? Well, we did get some rain, so no, we're okay out here in good old St. Charles.
Oh, so you didn't make a sojourn far down south, sir?
I might have, but I go from parts unknown, so I'm not going to tell.
Interesting. That was a bit of a long foray for a pandemic, sir. I was surprised to see you outside your friendly confines of St. Charles. But interesting stuff. No little foray is an easy one these days in pandemic America, where we find ourselves in mid-2020. And also joining us over there from the land of the pit, you know, he's the Greasy Meatball, but maybe not for much longer, listeners. He's heading on down south to deep in the heart of Texas. I might have to change up that moniker. I put it out to you guys. What's a good Texas-inspired delicacy? You know, Austin, pretty famous for barbecues, and maybe that's it. Maybe you want to go a little bit Chili's. Maybe he's now the spicy chili. I don't know. You could go with a Tex-Mex with a burrito. But that's not really unique to Texas. I put it out there to you guys. You listeners out there, you're a very clever and creative bunch. How should we refer to the meatball once he makes his big sojourn down south. Of course, I'm talking about the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Lion Capital. Mr. Meatball, at least for the time being, what is going on, sir?
Not much, just relaxed, hanging out, and getting ready for a great show. I'm excited for all the banter to come.
Yes, shall be a lot of banter forthwith. So let's get to it with the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Welcome to the Trading Block. Maybe we should rechristen this the Banter Block. I like that. This is, of course, the portion of the show we break down what the heck is lighting up our screens to kick off the show and indeed our broadcast week here. And it seems like the market's liking what they're seeing to kick off the week. Most of the major indices in the green. It kind of depends where you hang your hat, how far into the green you are, which has been pretty much the tail of the tape for the entirety of this year. The three different indices may move together, especially in those mad times like in mid-March. But outside of that, they tend to have varying degrees of movement. Right now, Dow is the laggard, up a little bit less than 0.33%. S&P up almost exactly 0.5%. And NASDAQ once again leading to the charge to the upside, up over 1%, almost 1.1% to the north. Gold continuing the lift. Gold has been on the quite literal rampage of late. We talked about it on TWIFO last week, how it had hit some, or was approaching some new settlement highs and intraday highs. Well, it hit those now. Hit an intraday high of 1939, which puts it at a new high. Well, of course, looks pretty much like a done deal. It's going to hit a new settlement high as well out there. So gold has been lighting it up. Silver pretty much hitting its highest levels since 2013, hit about 24 and a quarter. I'll have to see where it is right now, see if it's held up at that levels or not. Uncle Mike probably has something to say about that. And crude oil, at least through the lens of WTI, is still holding up north of that 40 handle, 41 and about a quarter, kind of slightly unched on the day. And our old friend VIX coming into Showtime was at about almost 25.5 exactly, which puts it up about 1.5 handles from last show. So getting a little bit of that froth, a little bit of that juice back into ye old VIX cash. If you like other flavors of VIX, well, check out our Vol Views. Talked about, someone had a question about the VIX cash term structure. I thought that was an interesting thing. You can go check out our discussion of that on that show. Of course, this is the week of dueling stimuli. We, of course, had the Dem plan a while ago. Now Republicans finally revealing their plan today. Seems like they're cutting some of those unemployment, some of the other benefits. So, of course, there'll be a lot of push and pull around that. But the market seemingly likes just the notion of any stimulus. The market seems to like it out there. And, of course, you may not like this. Unilever coming out and saying, you know what, during the height of this pandemic, not so much on the deodorant sales. So maybe if you didn't have enough reason to socially distance, there you go. Put that one in your quiver. Maybe add a little filter to your mask when you go outside. That'll just boost it all up for you out there. So interesting times that we do live in. VVIX, which is the vol, of course, not quite 116, about 115 and change. Still up a bit from our last show, about 4.25 handles or so. And our old friend VXX coming into Showtime was threatening that 30 handle, was at 29.9. Let's see where we are right now. Still pretty much right about there. So that puts it up a little over a handle, about 1.15 handles or so out there. And of course, other interesting things going on. People have been wondering, what's going to happen when we all eventually return to work. Where Google punting that ball down the road today, saying they're giving some of their employees the option to work at home through June 30th of next year. So extending that work at home date, say for roles that don't need to be in the office, which I've got to imagine for Google is quite a few of them. You can code from virtually anywhere. So interesting times we find ourselves in. All right, the table is set. Let the meal begin. Let's start the way we went. Let's go with the Unklest of Mikes. Mr. Uncle Mike, sir, what's catching your eye out there? Silver, S&P, what's on your tape today, sir?
All sorts of things, say the least. So in terms of the S&P, we keep that tease of staying by where the market opened on the year. And so with that, for my trading, and I actually did a strategy that I haven't done in a while, and I can talk about a little bit more on the strategy block today, in terms of just how to handle things when you don't really want to get out, but you kind of got to stay in, but you kind of want to get out when you're in that situation. And I'll talk about that a little more on the strategy block today. But with it, a few things that are happening today, I think I really believe the big news is going to be the stimulus bill that we're going to get. I think it's going to be a classic thing to where it's going to pass, I believe. How much more money we get, whether it's from more unemployment extended benefits, whether it's from extending some type of tax relief or whatever the case may be, I see it's going to pass. CNN's going to say it's a great victory for the Democrats. Fox News is going to say it's a great victory for the Republicans, like everything that goes along those lines. And but I think ultimately the market's going to like it because it's going to continue to empower the consumer. The other reason I think it's going to pass is that Republicans want to get reelected, Democrats want to get reelected, and if there is a situation to where the economy is worse going into November, whether you're Democrat or Republican, you're likely going to get blamed for it. And so you're probably not going to get reelected. So that's one of the reasons which I think it will pass. Just kind of going down the list of things lighting up my tape at this point. Apple, we did make that run at 400 a while back, but still not really able to make another run at it. So interesting to watch that. Still keeping an eye on Apple, of course. Big mover right now over the course of the last week or so is SLV for me. And so I got out of my ultra short-term collar, ultra tight collar a couple weeks ago and talked about it on the show. But I'm still in my more loose collar. And with that strategy right now, there's a whole lot of grinning going on, mostly by me. And so looking at this, my concern, or the good part about, there's good and bad to everything, of course. The good is obviously the price movement coming higher. We haven't had these levels in silver since 2013. So we're at 7-year highs right now in silver. And it's interesting to watch silver in that it comes like a thief in the night, and that as stocks increase throughout time, you see a trend. You have pullbacks, and the old saying, the stocks take the elevator down, but the escalator up. Silver, it's just kind of flat, putters around, and then all of a sudden, when you least expect it, it goes up a ton every few years. And so I'm not quite at a point to where I believe that it's going there at this point. But if you just look at the movement as to what's happened over the course of the last month, this has been some very powerful movement with silver. Now, to add to that, the low of silver in March got down to $10.86. So you could even say, and you'd be accurate in saying this, is that silver over the course of the last, since March, has more than doubled. So we've had quite the run with silver recently. Now, why is that? Well, I think that ultimately, with everything that's going on, number one, silver's kind of catching up to gold, and that gold has been, silver's kind of coming to the party late, which a lot of times it does when we have a rally. Gold has been staying fairly high for a while now. That since gold has been a pretty nice run ever since probably, I would say, just kind of looking back at a chart here, almost 2 years now, gold has been having a really nice rally. And so with that, silver's just still been kind of puttering around for a while, and it's kind of catching up to gold. Silver is kind of the gold's little brother, but when silver does move, it does move very quickly, and it does move very violently, in a good violent if you're long silver. And so I'm still not at my short call point in my SLV collar. Still a little ways to go with that, but over the course of the next couple of days, if we continue to rally, I'm going to have to start making some decisions in terms of, do I just kind of sit on this, or do I roll up my calls? There's going to be some good problems to have, so to speak, in terms of what I'll be looking to do and how I'll be looking to take advantage of this. So silver's kind of one to where it's every time I have an annual review with the clients, I say, well, at some point it's just going to come up when you least expect it. And then I say that for years, and then over the course of the last couple of months, it's come up when we've least expected it to do so. And so it'll be interesting to see how far it plays out. one of the main things that stopped silver back in 2011 is when we were getting, and I'm referring to SLV, when we were getting up to the high 40s, the CME raised their margin requirements on the futures contract. And almost to the day, that is when silver started coming down. Now, I'm not saying that's the cause of it, but it definitely couldn't have helped matters, so to speak, when that happened. And obviously, it wasn't the cause of silver going from 48 down to 10 over the course of 7 years. But it'll be interesting to see what things affected. The other reason I see such an increase in the precious metals is because of the fact that when you keep printing a lot of something, it becomes less of a value. And that's something that's being printed a lot of right now is the U.S. dollar. We've spent a lot of money recently, and it seems to me that the precious metals are a way with which to be a dollar bear in a lot of ways. So I think this is another way with which we've another consequence of, or consequence, whether it's for better or for worse, for us doing all this stimulus that we're doing with the U.S. dollar. So that's another thing that's really lighting up my tape at this point in time. And combine that with, still doesn't seem we're on all too friendly terms with China at this point. And, we got an election coming up too. So this is kind of one of those markets to where a lot is happening and a lot of excitement.
A lot of excitement indeed. Mr. Meatball, you cared to add to that, sir? What is lighting up your tape out there in the stimulus-driven, pandemic-driven market, sir?
Yeah, I was going to say, we're getting pretty close to the time where Mike is going to start heading out to garage sales and buying inexpensive silver from unsuspecting garage sellers. So I'm looking forward to that. And I think that's pretty. We might be getting close. So, folks, if you see a guy who can squat thrust 800 pounds, bumbling through your sterling silver and offering you 10 cents on the dollar, that's just Mike out to take you, because his silver bugness is starting to take hold. So just be aware, folks.
Hey, Mark, do you need some help moving? I can help move all the antiques and anything like that. When help you load some stuff if you need me to.
Yeah. No, we're fine here, Mike. Don't worry.
You sure? I can help you move all of the good silverware and stuff.
Yeah, no, thanks. So there you have it, folks. There's Mike the Silver Bug in action. So I'm watching that. I'm watching kind of the market last week really did a little bit of a reset, and it's been interesting. We saw Apple take it dropped $30 in 2 days at one point. It's something we've been talking about, that there was real potential for Apple to take it on the chin. Apple's got earnings this week. Amazon has earnings this week. Google has earnings this week. And so far, these mega caps have not been rewarded for decent earnings. They've actually taken it on the chin because they've had such a good run. We saw what happened to Microsoft. We saw what happened with Tesla. So I think that even with some good earnings, there's potential for more of money coming out of Apple and Amazon and into some of the old line economy, especially with the stimulus coming. And if we continue to get some little more positive test result news out of California and Texas and Florida.
Yeah, your new home. You're moving from a low threshold of COVID to one of the hot spots of the U.S., sir. So,
well, we got 2 months, so I think I'll be in good shape when we arrive in beautiful Austin, Texas, the capital of the great state of Texas.
Hey, just keep Austin weird, will you? Just keep it weird.
It's what I'm known for. That will not be an issue with me.
And full of bats and or barbecue. All right, let's see what else is lighting up our tape out here. Let's see. We talked about a lot of crazy Tesla options trades last week and what some of the big size, crazy, hot positions were in Tesla land. Let's see if some of those worked out. Oh, wait, spoiler alert. Yeah, no, they did not. We were talking last week about the July 3,500 calls. Yes, I said that correctly, listeners. The July 3,500 calls. And yeah, Tesla didn't exactly make it up that high. We talked a lot in the last show, of course, about why we thought that was. It wasn't just straight up someone, we don't think at least, spending significant amounts of capital. They were over $1 at one point, these calls, doing serious size. Let's see, the OI at the time was 20,702. So someone allocated some serious capital to these things, which is usually a sign that it's someone on the professional side, probably a liquidity provider who got a heck of a lot of juice to sell, let's say the 2,500s or the 2,000s, something else of a more reasonable, quote-unquote, strike selection, then probably got that tap on the shoulder from the risk manager. Said, hey, you got to cover these. And there's kind of a dearth of strikes north of 2,000 in Tesla land. I think we kind of joked a little bit how you probably could have made some other choices to hedge that risk. But c'est la vie, those calls, however you want to view them, did not work out in their favor over here. Same thing for the July par puts, which as of our last show were the number one hot position in Tesla options with nearly 45,000 contracts open on the tape. Yeah, we didn't, and by par, I mean 100 listeners, not even 1,000, 100. Yeah, we didn't get there either. So in case you had if you sold that 3,500 100 straddle in July, which you could have got some decent premium for as of, I don't know, last week. You kept all of that. You did pretty good. Tesla had about a 1468 and a quarter. Feeling the lift today, up about 3.6%. So it's a day that ends in Y. Tesla is moving in the multiple percent in some direction out there. So yeah, the hot positions in Tesla, in case you're wondering right now, listeners, the number one position in Tesla land are the Jan 5 puts, 5.0 puts with about 32,000 open there. Then we go to June of next year, also on the 5 strike with about 21, almost 22,000 out there. Then we have to go all the way out to number 3 to get even a relevant put, quote unquote, more relevant than those. They're not really relevant at all, but compared to the 5 they are. And these are the Jan par puts, 100 puts with about almost 21,000. In fact, it's all puts in the top 10, and none of them are even remotely relevant. The highest strike we have are the INDICES 380 puts with 15,600. So the top 10 of Tesla, all puts, and pretty much all of them completely useless from any sort of real hedging outside of someone is trading in the CDSs or someone is trading some sort of extreme portfolio on Tesla and they need some sort of bankruptcy protection. Outside of that, there really there's no meat on any of those bones. Because you talked about it before, how these crazy puts tend to move the life of their own in Tesla land. There's a lot more Vega lurking in these puts than perhaps you might think, because they had some dollar swings. Witness our discussions over the years on those Tesla 100 puts as the stock swung all over the place. And now, it'll be interesting to see how these perform now that it's north of 1,400 out there. Let's see what's going on from an overall index perspective right now. And I had to check the tape a few times on VIX to make sure it wasn't broken, because VIX is doing a whole heck of a lot of nothing right now. 62,000 contracts on the tape as of a few minutes ago, which in VIX is a rounding error, is a trade. That could be one print easily in VIX land, a total of 62,000 contracts. I think everyone in the VIX pit right now is pretty much asleep. The ADV is 351,000 contracts out there, but it ain't going to hold up on that if these numbers continue out there. So a strong start to the week from an overall markets perspective, not so much from a VIX perspective. SPY doing decent paper, closing in on 2 million contracts. The ADV about 4.5 million out there right now, so not quite half its ADV, but getting up there. The SPX, similar paper, about 425,000 contracts on the tape. The ADV stubbornly, persistently north of 1 million, 1.02 million out there. Doesn't really budge much in either direction. The Q, 614,000 contracts. The ADV about 1.08 million as well, so the Q's putting up some good numbers. And Russell 2000 also kind of quiet today. 130,000 contracts on the tape. The ADV is 566,000 out there. The IWM is feeling a little bit of a lift up there, but it's kind of, weirdly enough, a bit of a laggard itself. Usually it leads the tape to the upside, to the downside. Right now it's only up about 0.4% out there. Maybe that's why it's not translating into a lot of overall options paper. Speaking of overall options paper, let's see what we got here on the tape today for our single names. Number 10 cost you 134,000 contracts to break into the top 10. That gets you to our friends across the street. Boeing. Number 9, we've got DraftKings. DraftKings back in the top 10. Ticker symbol DKNG, listeners, at about 154,000 contracts on the tape. Then we go up to number 8, NEO. NEO back in the top 10, $1.59 on the tape. Number 7, OI, a.k.a. Yamana Gold, ticker symbol AUI, 182,000 contracts. Then number 6, American Airlines, 192,000. Tesla, all the way down at number 5, 206,000 contracts. Number 4, good old Softy, 237,000 contracts. Number 3, Intel, back in my old stomping grounds there, 297,000 contracts. Numero dos, Apple, the fruit company. So Tesla number 5, Apple number 2, 305,000 contracts. What, pray tell, can be number 1? Well, it's AMD, the perennial kind of top 10er hanger-oner there, back at number 1 with the bullet, 436,000 contracts. A lot of that probably driven by the fact that they got some earnings coming up. A lot of names popping off this week. We got Hasbro before the bell today. See how things are faring on the toy side with Barbie and Transformers. Just about every big toy license. Hasbro has a lot of them locked up these days. And after the bell tomorrow, we've got AMD. We've got, Visa and McDonald's tomorrow. Pfizer before the bell. McDonald's before the bell. eBay tomorrow. After the bell, Boeing, our friends across the street, back on the tape on Wednesday. GE, Spotify, Six Flags. See what's going on with them out there. Blue Apron as well. And some company, FBUX. You may know them. I'm not sure about them. They are popping off on Wednesday as well. PayPal and Qualcomm also. Thursday, UPS, Amazon, Apple, and the Googs. So a trifecta of crazy fang goodness out there. Gilead also there as well. And the W's, the WWE. You'll see how Corona is impacting them, and Grubhub. And then Friday, we go back to ExxonMobil, Pinterest, Caterpillar, Chevron, Under Armour, and Merck. Let's see, we got a bunch of these names popping off. Hasbro was before the bell today. We got the results report for them already. Hasbro, at the time, going into this report, I should say, closing on Friday was $77.59. They were pricing in 7.9%. They delivered 6.5%, so a little bit of underperformance. They were at 72.5 at the time of this report. Let's see who else we've got on here. Facebook coming out later this week. Again, you can find all these for yourselves. Earnings move results, and earnings season reports over there. TheOptionsInsider.com. Facebook, $230.71 at the time of this report. In the past, they've moved $13.86, and right now they're pricing in $14.36. So a little bit extra juice. Hard to argue it's not warranted given what's been going on in Facebook land as well. AstraZeneca popping off on the 30th here. Well, we got them in our reports too here, listeners. AstraZeneca at, $55.80 time of this report. In the past, they've moved $1.68, and right now they're pricing in $1.89. So a little bit extra juice, but not a ton. Interesting, given how much attention has been focused on them and their COVID trials and COVID vaccine of late. Good old SBUX on the coffee front. They were at $75.78. They're popping off on the 28th this week. They, in the past, have moved $2.82. Right now, they're pricing in $2.93. Let's see. Our friends across the street popping off here. Let's see. They are at $173.76. They're popping off on the 29th as well. In the past, they've moved $6.11. Guess this. They're pricing in almost $10 right now, $9.95. So, folks, pricing in a little bit of juice on the way of Boeing. Gilead, this is a weird one. They're on the 30th. They were at $16.70 at the time of this report. They have moved 75 cents in the past, and guess what they're pricing in? 75 cents. So they're not pricing in anything different, which is very strange. I can't remember the last time I saw anything like that. Grubhub, they're on the 30th before the bell. $68.85 is where they were hanging out. They in the past have moved $9.25. Right now they're pricing in $5.36. So maybe some of this corporate action perhaps taking some of the luster off of the vol for the earnings event for Grubhub. Then we got the Goog twins. Let's go to the old Google, a.k.a. Alphabet. $15.08 as of the time of this report. In the past, they've moved $68.58. Right now, they're pricing in $76.18. So a a little bit extra juice. And let's round it out with a silly one. Let's go to the W's. WWE, they're at 44.72 as of the time of this report. They're also on the 30th after the bell. In the past, they've moved $3.36. This time, folks, pricing in some juice for Vince & Company, $4.28. So maybe something interesting to be watched out here in good old WWE earnings. Now it's time for us to watch what is weird, what is wild, what is whimsical. Yes, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's get odd. Let's kick it off. This one is a return offender. It's been a little while since we talked about them. This is Capital One Financial, ticker symbol COUP. You know these guys. They're the credit card companies with Nick Fury in the commercial. What's in your wallet? All that good stuff. Let's see here. They actually, looks like they're accounting for one of the larger single-name equity option prints out there today. Pretty sizable one for good old COUP. But before we get to that, getting a little bit ahead of ourselves. COUP, of course, ticker symbol, COF, trading $65.91. Let's look back over the year that's been for good old COUP. A year ago, they were trading a wee bit higher to the tune of $96.92. That's kind of a nice, gentle drift north to about 103.5. Guess when? Yep, February 20th. And then someone turned out the lights. They dropped down to $38 at one point here intraday in the middle of March. So, yeah, they got a drubbing, which is interesting. You know, obviously they have other entities there than just the credit cards. But you think, people have less capital to spend, but they are spending a lot on credit cards because they can't really buy things physically anymore. So it's less money to spend, but more of it allocated toward credit cards than perhaps it might have been in the past. So maybe some of that is the reason why we had a little bit of a rally. But the rally came in fits and starts for Capital One. By the end of March, it was back up to about $58 again. Then it sold off again April 3rd to 42. Then back up to 60 by April 9th. And then back down to, 50, low 50s again. 50 even, actually, by April 16th. So this thing was just up and down like crazy in the immediate aftermath of the big sell-off in March. Then it got up to about $70 again in late April, then sold off again down to, 53 and change in early May, and then it rallied again up to about 80 even, 80 exactly, 80.00 on June 8th. That's a day a lot of our names topped out on. And then it kind of just took it on the chin again, got down to, how low do we get here? 66.12 for the limbo pole there, and then it's kind of been vacillating around to where it finds ourselves right now, 65.78. So this one seems like it has a lot of fits and starts. It gets a lift, gets a boost, and then sells right back off. Then it gets a nice another run again, then it sells off. So interesting chart in the last few months here for COUP. Let's see what our Eye of Sauron dug up. Perhaps it may shed some light on this. Oh, this is interesting. Like I said, this is one of the larger single-name prints out there going up today, and otherwise relatively sleepy day for single names. 31, almost 32,000 of the AUG 52 half puts for 38 cents. This one up over there on the box. That's interesting. Box doing a pretty big print. That's the Boston Options Exchange. Let's see. They hit the bid. The bid was 38 cents at the time. They went up for 38 cents, about 32,000 times. Clearly opening almost 20% out of the money at this point, about 19%. Now, these are AUGs, and it's worth noting this is not anything to do with earnings because the earnings were last week on the 21st here in COUP, and the next cycle is not until October 22nd out here. So this is just an interesting kind of near-term line in the sand for some pretty enormous size. Someone obviously looking at these recent fits and starts in this name and saying, you know what, if this thing drops another 12 or so bucks, I'll take it. And I'll take it, and for that opportunity, I will get paid 38 cents, as the Irish like to say. Mr. Meatball, what are your thoughts on this one? Pretty sizable. I mean, it's not exactly super aggressive, but given the fits and starts we've seen in in Capital One, there certainly is a not insubstantial chance that these puts could be in the money. What are your thoughts here on, looks like someone doing the old premium harvesting here in Capital One Financial, sir?
You know, with vol still really high and financial still relatively low, I'm a big proponent of this approach. I've been doing it myself in XLF and some of the individual financial names. I think it's an approach that I really like. And the financials have relatively expensive volatility. So this makes a lot of sense to me.
Makes a lot of sense to our friend here. We're going to come back to this one. We have a lot of line in the sand puts that expire in August to keep an eye on out here, but this is a pretty sizable one in Capital One. And yeah, I mean, it's hard to argue against it. This thing has certainly merited some vol of late, but he's getting a decent premium to do. What is the vol here? About 60% on these puts here. So not an insubstantial amount, and he's not really doing it for a crazy long time. He's doing it in between cycles. I could certainly see an argument for this bad boy. And we'll come back to see if he's keeping his 38 cents 32,000 times, or if perhaps he's long quite a bit of cough way down there shy of the 52 half level. And now we have to keep on rolling to Coupa. Not Coupa Troopa, that'd be pretty cool, but Coupa Software, COUPA. I do believe this is a newcomer to the odd block. This is a global technology platform for business spend management headquartered in San Mateo. So there you go. It tells you all you need to know. Who was that wrote in last week saying they wanted more information on the underlying? So there you go. There's the ticker. There's what they do. If you want more, have at it on your own time, listeners. We got to get rolling. Coupa, ticker symbol COUP, COUP, trading a pretty whopping 287.33 right now. This thing has had an interesting year. A year ago, trading 139.5, clearly well north of that. This chart looks like almost the inverse of everyone else in the market. It sold off a bit back in March. Yeah, it actually sold off pretty hard. It was at about 152, 153 going into the great nadir of mid-March, and then it sold off down to, looks like about 99. So it got clipped by about 50%. It's not like it was immune, but then the size of the subsequent rally here has kind of just dwarfed all of that. This is not even a V-shaped recovery. This is a rocket ship to the moon, because it was back to almost unched by the end of March, and then now, obviously, it's well north of that. It's almost 2x where it was going into the sell-off. It did hit 2x at one point. It was over $300 about exactly a week ago. It was $316. It topped out at about $318 recently, listeners. So this thing has just exploded out here ever since this. Obviously, everyone's working from home. Everyone's doing everything remotely, and this name obviously riding that trend all the way to freaking infinity and beyond, to quote the great sage analyst Buzz Lightyear. Let's see what's going on out here today. This is a bit of a weird one, Mr. Meatball, a.k.a. the Texas Chili, a.k.a. the Tex-Mex Burrito, a.k.a. some tasty beef jerky. Let's see. We got looks like maybe a collar. We got 4,410 of the AUG 350 calls. So we bit out of the money calls going up for $1. Again, the prints are all sorts of late, so that makes it hard to intuit what was going on. These things were $1.30 bid, though, when the print actually went up at a little bit past 10 o'clock this morning. So probably a harvesting, but it's kind of hard to see. And of course, they also put up another leg earlier. It seems like another leg. If it walks like a duck and it quacks like a duck, I'm going to go out on a limb and say it's a duck, even though they're about 20 minutes apart, these two trades. Nothing else is going up in COUP, let alone for this exact amount of size. 4,149 of the AUG 240 puts also went up about 15 minutes before for $1.95. These were also late. The bid at the time they went up was $1.80, so it's kind of more mid-market here, but leaning towards the offer, and they were offered at $2.05. So it seems like, Mr. Meatball, it seems like this might be a bit of a weirdly mistimed collar. Someone buying the 240 strike for about $2 and then selling the 350 strike for $1. So doing the whole thing for about 95 cents out here. A, do you think these trades are related like I do? And then B, if so, what do you think was actually going on here? I mean, it's a whole bunch of mistimed nonsense. You think it's a collar, or you think something else is going up?
Whoa. Well, when Coupa and his software are up to mistrading, they mistimed their collar. Their trade needs saving.
How long have you been cooking up that one? The whole time I was talking?
The whole time you've been talking about Coupa software.
It is a fun name.
Yes. And I didn't do the whole song. I thought about it. So I think I think you're right. This is a collar. This could be somebody who's more worried about kind of what we're seeing in Apple and what we saw in Tesla and Microsoft last week. You know, with the bulk of the major tech earnings taking place now, you know, maybe they're a little more worried about, you know, being a part of, being a part of the sell-off of all tech than they are the actual company themselves. So this could be more of a macro type of hedge for the timing than a micro around earnings. So that would be why you'd set something up. So maybe they don't want to be collared for earnings. They want to be collared around somebody else's earnings in case they're caught in friendly fire casualty around some of these other major software companies that are reporting.
Kind of hard to argue with them in either regard. Someone wanting to put up a collar out here. People always like their zero-cost collars. I'm not a huge fan of them. Sometimes you got to pay to get something decent. And certainly in a name that's pretty much doubled since the pandemic, you ain't going to get those puts for the same price as a call unless you sell in some near at-the-money call, and that's clearly not what this guy wants to do. But he's getting a decent amount of juice, paying 95 cents to insulate himself for a wee bit of downside here. And we'll keep an eye on this one. I'm going to come back to this one because it's just fun to say, Coupa Troopa out there. Now let's go out to our last one. We're going to pay off a print we talked about back almost exactly a month ago, June 25th, out there in the Duck, a.k.a. Duke Energy Corp., ticker symbol DUK. Supposed to be pronounced Duke. I just like calling it the Duck because it sounds funnier. Let's see. What do we see at the time? Back on June 25th, we saw 10,000 of the July 75 puts going up pretty much through the bid. They were at 102 when the bid was 105 out there. So someone crushing that line in the sand pretty aggressively on the 75 strike in the Duck. And let's see. These went up on the 25th. On the day of the trade, the stock closed at $79.45, so they were not quite $5 out of the money out there. And that also pretty much coincided with the low of the stock during the trade period here. It never really looked back from those levels, and it closed at $82.40 out there on expiration day. So it looks like they worked out. They were still open on the day of expiration, so this guy didn't bother closing them out. Looks like Mr. Meatball, someone pocketed a cool $1 million or so out here in the Duck. Is that your takeaway as well?
That is what it looks like to me. And good timing because the utilities are not having a great day today. So excellent timing on the sale.
Guy got his $1 million and he got the heck out of Dodge. And now it's time for us to get the heck out of the odd block right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's Monday. That means Uncle Mike's got a hot mic. It's time for the strategy block. Uncle Mike, sir, what do you have in store for us today?
Modifying a call spread that you still want to stay in, but you really don't want to get out of, or you really can't get out of, but you kind of want to stay into it. You think it could come back. You just modifying uncertainty with a call spread. And so I want to go through a trade that I'm in right now. I can't give months or strikes or anything like that. But I mean, everyone knows that I trade SPY, so you can figure that out. But the rule with which I have is that when the market goes negative on the year, I got to get the heck out of Dodge. And so we closed negative last Friday, and we opened positive today. So I'm like right on the border of am I in, am I out, am I in, am I out? Now, I don't have an advanced algorithm to where I automatically am in, out when we're positive and negative. Otherwise, it just doesn't work for my style of trading. So with that, it looked like the market was going to close negative on the year last Friday. And so as I'm looking through my trades and doing what I'm doing, I had a call spread on. And so with that, I didn't want to get out of the call spread because I'm right on the borderline. And if we all of a sudden gap up going into Monday, like we did, then I got to get back into it. It's just a giant hassle, and it just doesn't work. So what I did is I did a technique that I do maybe every 2 or 3 years, it seems, when a call spread starts to go against me. Let's say I'm just doing a bullish, slightly out of the money call spread, vertical, and market goes against me, but I still want to have bullish exposure. So, of course, one way with which you can take off exposure, maybe close half the position. Maybe you could sell another call spread on top of it, turn into a butterfly. There's a lot of ways to do it, but something that I like to do when a call spread goes against me is I like to roll down the short leg of the vertical call spread to something that's closer to the long leg for a credit. Now, what does this do? Does this mean that when I say credit, does it mean I'm taking profits? Well, good gosh, no. I guess I'm taking profits technically on the short leg, but don't think of this as a profitable trade. Think of this as a trimming up trade. So what I'm doing is I buy to close the short leg, and then I sell to open a short leg that's closer to the long leg, and essentially just reducing the amount of deltas that are on the table. Now, what does this do? Well, what this does is it gives you a little bit of a credit, so you're kind of taking money off the table. I always get concerned when I say the word credit because people think, oh, free money, credit, it's easy. No, it doesn't work that way. But what you are doing, you are getting a credit, so the amount that you have at risk is less than you had at risk originally because you're selling a more expensive short call, but you're giving up some potential upside on it. So with it, let's say you have a 10-point call spread and market goes against you and you buy to close the short leg on the 10-point call spread and you sell to open a leg at the same expiration to where now you have a 5-point call spread. Now, what does this do? All right, so the market's gone down, and now let's reanalyze the 3 scenarios that can possibly happen. Should the market stay the same? Should the market go up? Should the market go down? Should the market stay the same? Well, you're definitely better off because you have less money on the table and you have less time decay working against you. Now, when to get out, how to get out, things like that, that's a topic for another day. But should the market stay the same because you have less money on the table, you're no question in a better position. Should the market go down, you're definitely in a better position because you have you have less money on the table. You have less deltas on the table. You have less exposure. So now let's get to the tricky one. What if the market goes right back up and you did this adjustment to take deltas off the table? Oh, you flippin' idiot, you. How do we deal with the flippin' idiot scenario of doing this adjustment? Well, this is the thing with which to consider. And I've been in this situation many times throughout my trading career, and I'd say it probably comes up every 2 or 3 years. What happens is that when the market comes down, a lot of times implied volatility goes higher. Now, with what I'm saying is that in this market environment, things could do anything, of course, but typically when the market goes lower, implied volatility goes higher. So a lot of times you could be selling and doing that roll in a beneficial situation because volatility is higher, you're selling more vol as vol is going higher. So that's kind of could be a benefit as the market's going lower. Now, when the market snaps back and goes higher like it did today, now it didn't really snap back, it just kind of is going up a little bit right now, but let's say when that happens, which is ultimately what we want, because remember we still do have bullish deltas on the table. When that happens, volatility typically goes down. Now, it's not going down a ton today by any means, but it's definitely going down for sure. So when that happens, with vol coming down a little bit, it's not going to bite as badly with that short call going against you. Now, of course, I'd have been better off just sitting tight and doing nothing, no question about that, but managing risk is something that I do. And if you don't manage risk, then you're not going to be around very long. So with that, of course, if God were to have told me on Friday that, Mike, the market's going to come up on Monday, well, I wouldn't have made this trade. But unfortunately, God doesn't tell me where the market's going to go. So trust me, I've asked him. He just says, no, you're on your own, kid. No, just kidding. But anyway, where I'm going with this is that because I'm managing risk, what I'm trying to do is make it so that I have a lesser position on the table, but with time decay working less against me now and volatility working somewhat in my favor now, yes, it's a bad move if the market's going to snap back up. But remember, we don't know what's going to happen. So I like it from the standpoint that what this does is it puts you in a position to still have exposure to the marketplace, to still have cash on the table, but at a much lower risk than what you have originally, should you want to continue to stay in the trade. I would say, folks, most of the time, if I'm in a bullish call spread and the market goes against me to whatever my line in the sand is, I just get out. That's what I would say I would do probably 80 to 90% of the time. But in this instance, what I wanted to do, because I'm right on the borderline of where I have to be in if the market's positive, I have to get out if the market's negative. This is the adjustment I make in that situation. Now, this may fit towards your trading, maybe not, but that I will leave up to you, the individual trader. And that is the strategy block for today, July 27th.
All right, and let's see if we can squeeze in a few of you with a little bit of the quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, since Uncle Mike was just talking about managing risk, maybe this question from Baiju Thomas may be appropriate. Baiju says, hey, Mark, listening to your podcast every day now as part of a morning walk routine I've developed. Well, glad to hear it. Glad we can keep you informed and engaged and enlightened and maybe a little bit entertained there on your morning walks. Or at the very least, we give you enough content to keep your walks busy. He says, perks of working from home, I guess. I save on travel time. Yeah, I'm with you there. My question is specific to tracking clients who hold naked short positions, either for calls or puts. How can you risk these clients? The margin is like a VAR, right? So the value at risk. It only tracks a certain amount of risk, which is not sufficient for black swans. Stress tests are the one way I know of increasing the P&L by percent up and down to get an idea of max loss. But is there any other way than P&L stress tests? And how do you track clients who hold naked positions for starters? Do you take the net short position report of some sort? Thanks. Well, a lot of this, obviously, on the brokerage side, kind of varies depending on the client, on the broker, on what type of margin treatment they have set up, how much capital they have in their account. But yeah, you're right. The basic way, of course, something like a put is, of course, the line in the sand we always talk about here. When you cross that, how much it costs to actually buy that stock, and then take some variation of that cost, maybe 50% for margin, a little more, a little less. Calls, obviously a different beast because they're unlimited on the loss side if they're naked. So that kind of depends on the client and the broker, how much they tie up for that. But you're right, the weird scenarios, the stress tests are talking about these extreme events because, as we talked about many times on this network, things don't perform normally in those extreme scenarios. Look at the vol on those puts in the madness of March. Things get extremely bid up, which adds an extra wrinkle, which makes things a little bit more dicey to calculate. Mr. Meatball, you're out there managing money these days. What are your thoughts here for Baiju on what are the best ways to stress test or just gauge the risk of naked short positions in these crazy times? What are your thoughts, sir?
Yeah, I'm a big proponent of stress testing. I can tell you what Goldman does is they do like a 1 standard deviation move, a 2 standard deviation move, and like a 4 standard deviation move. And then they double the VIX and I believe triple the VIX. And that is their stress testing. And so, which is one of the reasons why I say, even with a simple short put strategy, it doesn't hurt to buy like a penny put or a 5-cent put to turn it into a credit spread so that you have an out. Because things look great and then you get something like March. And it completely changes what your entire trading atmosphere, your trading sphere looks like. And I can tell you that the biggest mistake I see is that people individually stress their trades. They don't stress their whole portfolio. And that's what gets them into trouble. So, they think they've got individual trades that offset, and then they don't realize that their whole portfolio correlates. And so that's an important piece that I would remind all of our listeners about is don't just stress test individual trades, stress test the whole portfolio.
Yeah, look at middle of March, right? So we've said that many times. When it all hits the fan, everything goes to one. You had gold. You're looking pretty good right now. Gold in the teeth of the madness of March, not so much. So all these things that you think are supposedly non-correlated or inversely correlated, they tend to move to one when all the madness happens. That's a good point. And, talking about the penny options, that's probably what our friend was up to on those July 3500s. They were in Tesla, they were a little more than a penny. They were $1, but he probably was looking to free up some capital for something else, hence spending money on theoretically worthless options out there. It obviously was worth it for him to free up some capital to do something else. But yeah, it's an interesting question. We don't get a lot of discussion on stress tests here. Maybe we'll revisit this down the road on like a vol views or something. But it is an interesting idea for how to properly do it. Because you're right, just moving a couple standard deviations, is that enough? You really need to look at the skew, and then you need to move. You can't just follow the skew, because that's what skew does. When you start moving down in extreme gaps, you jump off the skew. The skew shifts, and so you have to take that into account as well. So there's a lot of different interesting things that work. And it's an interesting question, Baiju. Maybe we'll revisit it one of these days when we have a little bit more time. Now it's time for us to head on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Mr. Uncle Mike, we'll start with you, sir. What is on your radar for the rest of this week until we gather here together again on Thursday?
COVID earnings and 3,200 or the open of the year for the S&P 500. Just want to see how those things react. I have a feeling we're going to have a lot to talk about this Thursday between all the earnings that are coming out and the news and everything that's going on. So that is what's on my tape. Oh, yeah, and silver.
Oh, yeah, and that shiny, sparkly stuff. Mr. Meatball, same question for you, sir. What is on your radar for the rest of this week?
Earnings. And, what happens between the NASDAQ 100 and everything else. That should continue to be the story that everybody's watching, because that is right now the most important story of, that is, in terms of financial markets, that is the most important story about what's going on right now, is what is going to happen with the NASDAQ relative to the rest of the market.
The great story of our age. Stay tuned. Maybe we'll discuss it later on the network this week. Of course, if you're talking about staying tuned, listening live, stay tuned. That music means we're done, at least with this show. We'll be back in a little bit with the old crypto rundown, breakdown of everything that's hot. Things are moving. Things are popping in the world of crypto derivatives, not just on Bitcoin, on ETH. Mark, your buddies over there in Genesis have been going on and on about ETH options of late. Lots of stuff popping off out there and a lot more. Stay tuned for the crypto rundown in about exactly an hour. We'll get into all that goodness and a lot more. But before we do that, let's go back around the horn. Let's start with the greasiest of meatballs. Mr. Meatball, sir, if folks are intrigued, they want to learn more about maybe your thoughts on the NASDAQ versus everything else, or maybe some hedging strategies, or maybe they got questions about stress tests. Where should they go? What should they do?
Yeah, go to optionpit.com and sign up for our emails. I put out content every day. It goes out on the email first, then to the blog. So if you want to be in the know before everyone else, you have to be on my email list.
Get in the know. Sign up. It all begins. The journey of 1,000 steps begins with one step. To optionpit.com. Click subscribe, and then your journey has officially begun. And if you head on over to stcharleswealth.com, maybe you have your own kind of journey. Mr. Uncle Mike, what kind of journey can they take over there in the land of St. Charles, sir?
Well, over with the option pit, you said get in the know. I'll add one to it. Get in the know, make you some dough. So we'll do that. But over at St. Charles Wealth Management, you're looking for a financial advisor who views times like this as major opportunities as opposed to times to crawl in the corner, avoid the phone calls from the clients, and tell the other people in the office if one of my clients calls, tell them there's plenty of reason to panic and hang up quickly. If you're looking for an advisor that doesn't do those things and looks at these markets as times of opportunity, stcharleswealth.com. I'd be more than happy to help anyone. As we know, options aren't for everyone. Mark, please correct me on that if you will. But I think they're for a lot of people, and I enjoy trading them in long-term portfolios. It can and is done here.
There you go. It's done there. stcharleswealth.com is the place to go. And on behalf of the greasiest of meatballs and the unklest of Mikes, and indeed myself, thank all of you out there for downloading, streaming, subscribing, sending in your questions, listening live, commenting on the different platforms, leaving reviews to help new people discover the show. All the fun stuff that you guys do. Keep it coming. We'll keep the shows coming then. And we'll see you back here in exactly an hour for the Crypto Rundown. Then we're back again throughout the week with more good stuff all the way through to Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.